Welcome, friends. Today we're putting our analytical skills to the test by taking a deep dive into Procter Gamble, which uses the symbol PG. We'll use our proprietary technical toolkit to analyze the stock's price action and our quick look fundamental tools to get a sense of the company's financial health and value. If you're ready for a comprehensive breakdown of Procter Gamble, let's get right into it. First, we'll look at Procter Gamble's stock price through the lens of our proprietary technical toolkit. This toolkit helps us read the market signals, uncovering trends and potential turning points that can guide our trading decisions. Let's start with the candlestick OHLC chart for Procter & Gamble. This chart maps the open, high, low, and close prices of the stock over time, offering us a detailed view of its price movement. We're paying special attention to key patterns like bullish engulfing, which suggests that buyers might be taking control, or a hammer pattern that could indicate a reversal from a downtrend. Recently, we've seen a series of doji candles signaling indecision in the market about Procter & Gamble's direction. This could mean a potential breakout is on the horizon, but it also tells us to tread carefully and look for confirmation from other indicators. Next up are the moving averages, specifically the 50-day and 200-day moving averages. The 50-day line helps us spot short-term trends, while the 200-day line gives a sense of the longer-term momentum. Currently, Procter & Gamble is maintaining its position above the 200-day line, but there is no recent golden cross, meaning the 50-day average is not currently crossing above the 200-day line. Instead, the stock is consolidating, showing potential for either a new uptrend or a continuation of sideways movement, depending on how the broader market moves. Now let's bring in the MACD, the Moving Average Convergence Divergence. The MACD helps us understand the relationship between two moving averages of a stock's price. For Procter & Gamble, the MACD line is currently below the signal line, indicating bearish momentum. However, it's important to note that the MACD is reaching levels that suggest the stock might be oversold. The deep negative readings in the histogram and the distance between the MACD line and the signal line suggest that selling pressure may be reaching an extreme. This could potentially set the stage for a relief rally if buyers start stepping back in. It's a signal that we need to keep an eye on, as such conditions can often precede a rebound. Our stochastic oscillators, both fast and slow, add another layer of insight. These oscillators show us when Procter & Gamble is overbought or oversold, which can hint at potential reversals. Recently, Procter & Gamble's stochastic oscillator has moved away from overbought conditions, indicating that some of the buying pressure has eased, potentially allowing for a more balanced or downward correction. We also use Fibonacci retracement to identify potential support and resistance levels based on recent price swings. For Procter & Gamble, the stock has recently retraced to its 38.2% level, but has not shown a strong bounce. This suggests that while buyers have shown some interest at this level, the conviction to push the price significantly higher is not yet evident. Our volume profile analysis shows where the most trading activity has occurred for Procter & Gamble. The visible range highlights that a significant amount of buying and selling has taken place around the $160 mark, making this a key area to watch. If Procter & Gamble can stay above this level, it could serve as strong support going forward, but a break below this level could signal further downward movement. We also apply Heikin Ashi candles to smooth out the price action. Unlike traditional candlesticks, Heikin Ashi uses average price data, creating a clearer view of trends and helping to filter out market noise. For Procter & Gamble, the Heikin Ashi chart is currently showing mixed signals, with recent red candles indicating a period of consolidation or possible downturn. This highlights that the market is waiting for a clearer signal before resuming a strong trend in either direction. All of this makes our technical analysis of Procter & Gamble feel like a conversation with the market, helping us understand what might come next. But before we make any decisions, it's time to switch gears and look at the fundamentals of Procter & Gamble using our Quick Look fundamental tools. These tools help us understand the company's value and how it stacks up in the industry. We'll start with the price-to-earnings ratio, or PE. Procter & Gamble currently trades at a higher PE compared to the broader market, reflecting the market's expectation of strong and steady growth. A high PE can sometimes be a red flag if it's unjustified by growth, But in Procter Gamble's case, its historical stability and strong brand portfolio might justify the premium price. Still, we have to weigh that against the broader economic climate to see if investors are willing to keep paying up. Next, let's talk about the dividend yield. Procter & Gamble has been a reliable dividend payer with a yield that sits around 2.5%. This makes it appealing for income-focused investors who value steady cash flow. The payout ratio for Procter & Gamble is also worth noting. It sits comfortably below 70%, suggesting that the company has room to maintain or even grow its dividend as long as earnings remain strong. Now, onto earnings per share or EPS. Procter & Gamble has shown consistent growth in its EPS over the past few years, which is a positive sign for long-term investors. The company's ability to generate steady profits has been a cornerstone of its appeal, especially in times of market uncertainty. However, with recent shifts in consumer spending trends, it's important to monitor how these changes could impact Procter & Gamble's performance going forward. Our analysis also looks at the debt-to-equity ratio. Procter & Gamble's ratio indicates that it manages its debt responsibly with a balanced approach to financing growth without over-leveraging itself. This is crucial because too much debt can become a burden, especially if interest rates rise or economic conditions change. Procter & Gamble's conservative balance sheet provides some peace of mind for those looking for stability in their investments. Free cash flow is another key metric. Procter & Gamble generates robust free cash flow, allowing it to invest in growth opportunities, buy back shares, and continue paying dividends. This financial flexibility is like a buffer against economic downturns, making Procter & Gamble a more resilient option in uncertain markets. And we can't overlook return on equity, or ROE, which measures how effectively Procter & Gamble is using its shareholders' capital to generate profits. With an ROE that's consistently above 20%, Procter & Gamble demonstrates efficient management and a solid return for investors. This makes it a compelling choice for those seeking a well-managed company with a track record of delivering returns. So whether we're zooming in on the charts or digging into the numbers, our approach gives us a full view of Procter & Gamble. The proprietary technical toolkit helps us time our entries and exits with precision, while our quick look fundamental tools ensure that we're backing a company with a solid foundation. For those who've stayed with us, here's the bonus. It's our preponderance of indicators statement. With 9 bullish signals and 4 bearish signals across both technical and fundamental analysis, the preponderance of indicators now leans cautiously bullish for Procter & Gamble. While the stock has faced recent bearish pressure, the longer-term outlook and fundamental strength still point to positive potential. Investors may find PG to be a solid choice for both potential capital appreciation and stable dividend income, especially if the market begins to see a relief rally from oversold conditions. Note it, and we can watch together as we are right or wrong on this call. Remember, this is not investment advice, and you need to do your own work. If you found this breakdown of Procter & Gamble helpful, don't forget to like, subscribe, and ring that bell to stay updated on our next analysis. Until next time, happy trading and investing.